Hey guys, our days of low volatility is about over, thankfully. We're going to get a little bit more volatility this week. They're projecting the implied volatility currently at a level of 1069 to go to 1310, 1455, 1513, and 1562 by next week. So we can look to see where these strikes are on the sheet to get an idea of what the range could be. And again, these are median prices, also the medium volatility range. It could go bigger than that, but you can see that the path is accelerated. So first, let me get back to my calendar next week and show you that the volatility probably will start coming in on Thursday. Uh, Manufacturing PMI may give us a tiny bit, but the real volatility is going to be Thursday with the um, manufacturing numbers, GDP, especially the GDP. 3.5 is Atlanta Fed, so that's over the 2.6 consensus. So anytime you have a change in the economic number, that can give a boost to the price up or down. And we've got jobless claims also and new home sales. But the big one is going to be the PCE on Friday. Um, if we are at peak inflation and peak Powell, then you would expect to see this number start coming down. And so at least a 2 or lower. Anything over a 2 would be very bearish. But 2 or under would keep the market happy. So that's going to be an important number. Um, but to get an idea of what the VIX range is, 0 to 15 is low typically, 15 to 20 is moderate, 20 to 25 medium, high volatility, 25 to 30, and over 30 very high. So let's take a look at the VIX. And so here's your implied volatility levels, 1977. And so you see that that projected price of getting up to 1562, maybe a little higher. Let's look at the sheet for that. Let's flip over to the here price sheet for the Thursday GDP, and so we can see that 15 volatility here in the middle. And if it did start increasing, we could potentially get to 1645 or higher. So we'll have to keep our eye on open interest and deltas for that. 1645. The way I like to do this, here is the upside, the 4055, 4055, and that's a lower volatility at 1392, almost 14. So 1314 ball versus, the other side. Let me show you the gamma. This is what I like to see. So you can see the standard deviation levels right here pretty clearly also. Um, 45, 35, 25, 39, 35, 39, 60, 40, 20. Um, but it's not going to be screaming high, moderate. So that bodes better for a upside move than a downside move. Um, Almost. We'll see which way it goes. But to measure, this is what the fun part is. So it's really hard to get con, you know conceptualize that on the chart for me. The implied volatility. The Jats PT indicator. Just put it on your chart and pop it in there, top folder, double click it. You don't have to make any changes or anything. Just hit OK. And that will measure whatever time frame chart is behind on the chart, the volatility. And so we're measuring the daily VIX, the VIX on the daily. So I can put lines on the chart on these threshold values 1, 2, 3, 4, 5, all the way up. And so that's 1 time the vol, 2, 3, 4, 5 times the vol. And you'll see that the algos respond to these levels. So here was 5 times the vol, and you got the pullback. And this was in July. And if I fix this so that you can see it, we were about 540, 547, something like that, 546, late June, and then the volatility collapsed. So if we look at the chart, that was big spike was COVID. If we go back and look at the chart for June, you can see that we had a big sell-off to the third standard deviation. That vol spike sent it down to the threes. And if I put a Donchian channel on the chart, you've got to see this. The Donchian will measure the range from top to bottom, high to low. And I just use the standard default 14. That is what the range is set to. Most of your CCI, stochastics, ATR, RSI, they're all 14 default. So measure from the top of that range because we were measuring ranges, right? So 5.42, that was May. So here's June right here. So go to the top of the range, to the bottom, and there is your, let me put it on that 547 right there. There's the bottom of your range from your Donchian channel right there. There was a little gap down right there. So it went right there. I don't know if you can see that. I mean, it is just right there. So we can measure the range, and those are points, daily points. That daily range was 547 points. And I want to copy this and scooch it over so that we can see both at one time. So this 5.47 range, so now you can know that you can go to the daily and measure the 14 period range, the Donchian, go to the high of the Donchian to the bottom, and that is your volatility. We just measured the VIX volatility in points on the ES. 547, 547. It's just the multiplier, so you're just 547 instead of 547. It's just the same thing though, it just expands out. So like today or Friday, we were very, very low at one time the range. 106 for Friday. So if you go to yesterday's range, let me pull this up. You can see we had a very low $1 range over this 14 period range. Really sucked too. So go to the top of the range to the bottom and you'll see it's $1. There is your dollar range. And so now you know, I think it was 106. There it is. Top to the midband. And that's what it traded to all week, 14 periods. Do you see that? So now you can trade the VIX on your ES chart. And now you can correlate the VIX to the volatility and see that no, the VIX is not broken. It's just that it's been compressed from all that decade of QE, um, the quantitative easing, and they really shrunk the vol. I mean, it lived down here at 1 and 2 most of the time. But when you got these high vol spikes, here was another one. Here was another 5, or here was a 6, 6 sigma. There was a 6 sigma spike right there. What a shocker that must have been for them. September of 2015. Any of you vol guys probably know what that was. September 11th. Okay, well, um, something happened. Maybe with a repo or something like that. I think repo was around there. Where was that? 2018. I forget. There was a repo spike. But here's another one. So, um, set the March 2020. Yeah. Yeah. But here you can see, um, here was an 8. I mean, they don't get up there that often. So you can hit, like, here's the 4s. The 4 is a good volatility level to hit. So when it reaches up and hits that 4, that's when you know that you can sell that vol. Yep. Here's a 3. And and if you're in a low vol environment, you can trade from the 1 vol to the 2, right? Or, sell the 2, sell the 1, buy and sell your levels now using the Jats PT. And you know how much the range is going to be for your market with the Donchian channel. So now with the Jats PT indicator telling you what the normal statistical level is going to be for that period of time, you have a ballpark. You can say from the bottom of that candle of that, or the bottom of that range to the top, this is my world, right? And if something, unforeseen happened, like they pick up the phone and say, we solved all the world's problems, everything is going to be rosy, the market will take off, right? So there's always going to be break the ranges, but in the normal 9 to 5 world, or, it's going to stay inside the range until it breaks. So, but now you know how to use the VIX with the JATS PT and not have to say, well, what the hell is a 19.2 implied volatility level? That's how do you trade that? Well, you trade it with JATS PT by using JATS, not VIX. We can measure the VIX volatility with JATS and turn it into a language we can understand. Money. Y'all let me know if you have any questions on that. Going through the price action, we are inside the ones in a flat spot. We're trading between the quarterly one and the JP Morgan caller. There's all kinds of support resistance inside the ones around here for quarterly and monthly. My implied volatility range for the options. And I like this 1, 2, 3. So you can put on your chart 1 month, 2 month, and 3 month. So there's a 1 month, there's a 2 month, there's a 3 month on the open and close because we can do both. So let's do it. And That is a great distribution, the 1, 2, 3. I mean, it is beautiful. I love this distribution. Look at that. It is so cool. So definitely put this one on your chart and check out the ES and check out that volatility with the VIX, helping us figure out these ranges on what to expect. The range to trade to from a Donkian channel works out pretty good. And here is a quarterly, monthly, weekly, where I can combine multiple time frames. I can put the monthly, the quarterly, and the weekly in all kinds of different ways, like a 12 week or a 90-day or a 7 day or 1 week. There's many different ways to slice and dice these datas, and be aware that you can put multiple time frames on here. So I can put two ES daily charts on here, run one on a 3,000 day and one on a 5,000 day, and that allows me to go back further and grab um, levels. Look at this. Look at that. Levels, this 3, it went right to the 3 on the 5,000 day. Um, get the calculations. So when you change the number of days in your calculations, you're going to get to go back further in time. And I'll help you with your calculations and training with how many days you would like to, experiment running, you know, a more current 1500 or 500 for a smaller time frame to, the 3,000, 5,000 days, going back so that you can see past history on the chart because, you know, these algos are responding at these 1, 2, 3 levels, especially when you get to the threes. That's where they're going to, the market makers and the ranges end. And now we have a way to measure that with VIX to know at any time where we are on that distribution and whether the range is expanding or contracting on VIX. VIX and ES, what a combination. And then having the ability to run our spreads. I've gotten a couple of more strangles I'm going to put on the sheet. Um, uh, about 4,000 more in premium total. Three, a little over 4,000 for three contracts. Um, so I'll add that to the sheet, and then I've got an ability now to see my pricing sheet for those expiries that's got open interest. And let me can't grab this right thing here. So find my mean, find my 1, 2, 3s on the IV, and see my open interest. Here's a 22,000 contract order, you know, at the usual spots, of course. But you can really see more information. I've got row on here, and quite a lot more helping me make these decisions and gamma. So I'm absolutely loving the quick strike zero DTE sheets as well as the weekly, monthly, 2 and 3 month. I'm all set, all set, and I get to see the volatility smile. If I want to come in here and see the actual curve on this, I can pull that contract up. So here's the Monday and see what they're expecting for volatility, what will catch, potential short up or long, but versus the long vol versus short, and where that future price is. And you can see the volume for the contract, 37.05 for Monday. See where the future price is sitting, 39.88.5. It's just there's so much at your fingertip on this. See the open interest? Um, got a call up here at 4,300. So, open interest change, most actives. Got a put wall right at 39.80. That's interesting. And so you can see the most sought after, 3,600 was the biggest, and 4,100. So there's your overall range. That's a big range, 3,600 to 4,100. And then inside here, you've got your big strikes at 40.85, 41.30, 3,700, 35.25. So they're all over the place. I don't know how much this helps me. What helps me that I can really, really see with my eyes uh, is the VIX. Now I know what to expect instead of, looking at a sheet where 1765 might be. I mean, that's, what they do. They'll look at the sheet, 1977, and they'll pull up their pricing sheet and say, well, show me where 1977 is on Wednesday or Thursday, and that will be in the middle. 15, well, here it's a little higher. So that's out here. 1977 would be 38.05. So that doesn't make sense because we're right now at 1977 at the low vol. And again, that's way out here at 38.10. So I'm not sure if I'm getting the right VIX calculations. I don't subscribe to it, so maybe my calculations aren't 100% here. Um, Hang on one second. Yeah, that's right. But that doesn't make much sense. Let me pull up that sheet again, looking at Friday for next week. Make sure I've got the right Friday on there.
Connection lost.
What is G? See, I don't know my symbols. Hang on, let me look. What is G? And that would be February. So we're still in January, so it would be F. That's right, F. So that is right. EW4F3. Okay. So if I pull that open and look for that 1977 that we're at currently, it's showing me that we're going to be at 1562, which is lower. So 1967 is at way up here, 3800. So we'll drift down lower to 1500 going into Thursday. And that means we're going to be under, a 1.5. And so that's a $1.50 range. Um, to a $2 range, $1.50 to 2. So there's a $1.50 right there. If I can put it on there. There it is. And a $2 range right there. And there's your Donkian channel, $2 range. So that would get us to the $2 range that's in the current Donkian by Friday. Potentially, if we stay in this range between 1.5 and 1.9 or 2. So trade your daily Donkian and be aware that we're going to be low vol going into the report, so that'll probably drift up. And we'll just look for those higher strikes. 4064, 4022, 4064, 4076. So that is my plan going into next week. 4022, 4064, 4076, and then see what happens on Friday. Okay? And we'll expect that lower volatility, smaller range, between 1 and 150 going into the report on Friday, and then maybe 1.7. Um, we'll see if we get down to 3800. We'll be back up to the 1900 or 2 vault. That's pretty cool. So use the VIX to help you plan your trades and see where you are. See if you get out of, you can measure now where those volatility spikes are, and you can see what happens when you put um, the slope going long or short. And if you want to sell vol, that would be, the time to do it is waiting for those oversold places. I've got a bloodhound template. I can show you how to put the PT2 slope on the chart and very easily put a strategy together going long or short. There's long. So if you just want to wait for the vol to go long, but if you want to go short, then you can go set it to go short only. And that is with a PT2 slope solver. We can go over that, just so simple. Put it together with the long short modifier. And um, threshold if you want to wait and take trades only up until a certain threshold. You can block any volatility above that threshold or below it that you don't want to trade. So you could put yourself in a volatility cocoon um, by, hang on one second. There we go. Require that it be between, 2 and 4. That's all you want to trade with long vol long. You could do that. You could do the VIX threshold between 2 and 4 going long or 2 and 4 going short. You could put yourself wherever you want on the volatility slope or threshold, and we can talk about that in the room. Okay, guys, that's all I have for you right now. Thank you very much. It was a long presentation, but I love the VIX with Jats PT, and I'm glad I got to show it to you to help use with, you know, figuring out where we're going to be and what that might look like for a range. And, the range is the Donkian on the daily to match the VIX. Okay, thanks, guys.